Investors have been raising their glasses to the world's most sought-after tipples, from Chateau Lafite to Pichon Lalande. This as wine prices have continued to soar on the back of growing demand from Asia and jitters surrounding more traditional assets. It's pushed the Livex Fine Wine 100 index up more than 30% year on year. So will the trend continue, and which wines offer the best investment? Joining us now, Miles Davis, fund manager at Wine Asset Managers. Miles, thanks for coming in. Some really interesting phenomena taking place in the wine industry at the moment, and it's interesting to see what the Far East is doing in this field. And from your notes, it seems they're not just buying the things that you guys in the wine business would have been saying are worth buying. They're taking a brand and just looking for anything by that brand. And so some of the years that haven't been very popular are getting some good demand.
Yes, so far it's been brand-led, and Lafite leading that, and the second wines of Lafite and other Rothschild stable wines. The brands are spreading though. As Lafite gets more expensive, it's making other top brands, mainly the first growths, look very cheap in relation. So Latour particularly and Mouton Rothschild have been catching up. Margaux still lagging, and Haut-Brion also lagging. And some other really famous wines such as Cheval Blanc still very, very cheap and still pre-credit crunch prices. So it is spreading, definitely. Lafite has been leading the way and pushing the index and contributing a lot of performance to our fund.
How much is this an Asian phenomenon? I was at a vineyard, a chateau over the summer near Bordeaux, and they were really telling me how strong demand was coming through from Asia.
The demand from Asia is huge at the moment, and the burst of growth from China, particularly in the last 2 or 3 years, has been extraordinary. And whilst the Western world is still sort of hurting a bit from the credit crunch and stuff, Asia seems to be completely ignoring it and is all guns blazing right now.
There's a very good reason for that though, Miles, and that's the fact that countries or jurisdictions such as Hong Kong have cut the tax from 40% on imports of fine wine to 0%, and that's why we're seeing this stunning move up the charts of the amount of auctions that are generating interest from areas such as Hong Kong, isn't it?
There's partly that. It was 80%, they then cut to 40% and then down to 0%. But just the appetite for wine in general has just, in mainland China, has just really taken off. When we started our business 4 years ago, mainland China wasn't a part of it at all. And the appetite in mainland China for showing off with high prestige brands at corporate dining tables, just in restaurants, and being seen to be owning and drinking these brands has really taken off.
Look back to some of the past sort of real bull markets in wine. How long do they go on for? How far do they go?
Well, on average, wine averages a return of 15% a year. Over the last, we're having a very good year this year, but we're only up 30%. Last year we're up 8%. So the long-term average is quite normal at the moment. I think on the long term that can continue to grow. At the moment,